Welcome back to Stocklabs for another market recap. This is for the week that ended on April 14th. So this holiday shortened trading week. Markets closed on the 15th for Good Friday. So yeah, a little bit of an abbreviated week, but that didn't mean that there was any less action for the 4 days that we did have trade. So the week ended up a bit on the soft side as far as the overall indices go. Um, and if we just look at the overall performance for the market, so the S&P was down 2%, over 2%. NASDAQ got hit for 3%. Bonds got hit again, down 3.5%. So TLT's really been struggling. And IWM was the outperformer, up 0.6, and the Dow kind of hung in, down only 0.8. Oil was back on the march, 7% weak for oil. Gold continues to sort of keep its uptrend intact, up 1.4%. So not bad for the commodity related trades again, after they kind of took a pause in the last week. So our major leadership stocks that we like to keep track of, this is sort of where the losses for the market were for the most part concentrated, I would say. And just since they're such large components of the indices, the indices struggled. Market can't go up without these stocks. We've said it a bunch of times. So Amazon was the quote unquote outperformer out of the group, if you want to call it that, down only 1.8%. Nvidia got smoked, minus 8%, and Microsoft, Facebook each down 5-6%, Google down 5%. So I mean, there's no rotation among these. They're all sort of just trading up and down together with varying degrees of severity. So this is sort of what dictated the performance, especially for the NASDAQ being down 3%. I mean, this group was down over 4.5%. So the NASDAQ only being down 3% kind of tells you that the rest of the NASDAQ stocks, or at least a lot of the ones under the surface, market cap wise, they didn't get hit as hard as just these sort of headliner tickers. So as far as industries go, breadth wise, you can see it wasn't actually horrible. So like we said, even in tech, the median tech stock was down 1.5%. The NASDAQ was down over 3%. So you can see how the losses were concentrated in those higher market cap holdings that just push the index overall lower. I mean, healthcare did pretty poorly, down 3%. We had, I thought, a good week in healthcare either last week or a couple weeks back, but this trade has mostly just been pretty volatile for the most part. The rest of the market kind of fluctuated, just plus or minus unchanged, sort of on a median basis. Not quite unchanged, but you could see like they're toward the flat line. So consumer goods flat, financials flat, or down 0.4, but flat. Industrial goods up 0.6, kind of balancing out. Services up 86 bips. Utilities down 0.9, so probably kind of getting dragged a little bit with the bond market now, even though utilities tend to be a risk off trade when they're up, just because they're it's accepted that they're very safe. And basic materials are back to being the outperformer again, up 2% for the week, following the big move in oil and gold and the other sort of industrial metals and all of those related trades. So As far as subsectors, what was leading? So you can sort of guess. We have silver, aluminum. Um, a lot of the oil and gas subsectors are on here, sort of near the top. I mean, it's pretty thin though, because there's still even even with a large up move in oil, USO up 7% the energy stocks themselves are they had an up week, but not an outsized up week. I mean, we only even had 6 sectors up over 5%, and none of them were even oil related. They were all kind of random, plus silver, which is kind of just the beta metals trade. Um, as far as downside, worst performing sectors, so you see a lot of the healthcare sectors. Well, actually, 4 healthcare sectors populating the bottom 4 worst performers. Now, there is only one that is down 5% on a median basis. So overall, between the um, between the number of sectors and the severity of sectors that was down, the breadth actually was, you would say, it was pretty good compared to the performance of the overall market. So, like I said before, the major contributors to the losses in the market were those very large capped stocks that if you weren't in those stocks, it's possible you had a decent week, depending on if you were in the right sectors under the surface. Um, so yeah, that's it for industry breadth. We'll check breadth by market cap, just so maybe it gives us a little more insight in sort of the breakdown of performance across the market. So 1 to 5 billion. Okay, actually up 1%. So IWM was up 6/10, and actually the smaller, this 1 to 5 billion smaller cap range stuff was up about 1%. 9/10, not too bad. 5 to 10 billion. Okay, up 8. Wait, 5 to 10 billion. Where am I? Did I not click on something? Okay. Yeah, 5 to 10 billion, up almost 6/10. So kind of dropping as the market cap goes up, but still good relative to overall market performance. Large caps, 10 to 50 billion. Okay, now down 33 basis points. And mega caps were down 1%. So getting worse as we go up to cap range. And the Terra caps down 2%. Okay, so kind of in line with the S&P. Let's just see here. Best perform. Okay, it's funny. Airbnb was the best performing, 100 billion market cap company, but follow behind it. Caterpillar, Deere, Raytheon, Boeing, okay, defense contractors, and sort of reflation trade. Basically leading the pack. What was worse? AT&T was down 20%. That can't be right? IT. Oh, it really was? Wow. All right, I don't know what happened here, but that's crazy. Um, wow. Okay. AT&T hammered. Anyway, where were we? We were in screener. So like we said, breadth was pretty good for everything that wasn't, you know, TerraCap stocks. Under the surface, kind of the bones of the market, you could say, hung in there pretty well. Okay, we'll look at intelligence for this week. What are we expecting? Okay, so intelligence says that TISA will be up, so Russell going to struggle, and SVXY is going to be up, so volatility down, and then carbon, whatever this carbon ETF. I'm just going to ignore that. So not a lot populating this screen. So based on this, you would think that sort of the type of rally, not rally, but the type of action we saw this week is going to invert, where the large caps and terror caps maybe outperform, and the small caps are the ones that fall apart, based on this. So we can go and invert this screen to see what should be headed to the downside. Reverse this. Okay, volatility supposed to do poorly. Blockchain supposed to do poorly. Meme stocks supposed to do poorly. I mean, I'm just going to ignore these. These are kind of like joke ETFs in my opinion. But okay, inverse banks should be down, so banks should be bullish somehow. Uranium trade will be down. NASDAQ will be down. And emerging markets will be up because the bear ETF is rated bearishly. So kind of a weird mix between these tickers that are slated for downside, and then sort of the lack of results on the upside ETF screen. You would hope that some of these match up. So for instance, TQQQ is on here as downside, and you would want SQQQ to be rated bullishly, but it could be because of how much volatility there's been in the market, or maybe just because trends haven't been sticking as well, where things aren't quite matching up the way that we would like them to generate some sort of insight. But yeah, this is all just providing context for the coming week, which based on this and the just the regular upside, just the regular screen, I would sort of think that the slide that the market had this week is going to continue into next week. So I would expect that if we open up or flat on Monday, that you're just going to see some more selling start to take place. And then what we'll be sort of waiting to see is a 12-month hybrid oversold signal on the market from Stocklabs. So the last one we got was mid-March, which produced pretty big bounce in the market. It was something like 2,000. I think we were up over 2,000 up over 2,000 points in the NASDAQ by the time this signal sort of expired. So that would be the kind of ideal scenario that would take place. We continue to sell off next week, we get an oversold signal, and then the rest of the month we spend moving to the upside, which would put us in line with this April seasonality, where April is supposed to be a good month. Now, I don't know what is our performance so far this month to date. Month to date. We are doing very poorly. So NASDAQ is down almost 7% for the month. Bonds are smoked, minus 9%. S&P down 3%. IWM down 3%. The Dow down 0.8. Okay, so like I said, ideally we get an oversold signal next week, maybe mid to late next week. That would put us, that would give us sort of enough runway to have a rally into the end of the month that would, potentially continue somewhat uninterrupted to end the month, which I know we're sort of projecting a lot of stuff here and asking for a lot, but when you look at all these sort of numbers and put them in context with each other, you can sort of start formulating scenarios where things start to match up with each other and playing out correctly. And then you have sort of a plan of action for how to approach the market. So, good recap. Like I said, short week, but not short on market movement for sure. So, yeah, hope everyone enjoys their long weekend. Some people might be off on Good Friday, others not, but happy Good Friday. And we'll be back next week and hopefully just making the most out of the opportunities the market gives us. So talk to you guys later. Bye.